Reading is Standard Form 133. What you need to know. This session is intended to help you read and understand the information provided on the Standard Form 133, formerly known as the Report on Budget Execution and Budgetary Resources. This is a critical skill for anyone working in a budget office, whether you're doing formulation or execution. I recommend that you review Section 130 in OMB Circular A11. There you will learn the purpose of the SF133, its organization, general requirements for submission, and so forth. But the purpose of this session isn't to relay a lot of stuff that you can read in A11. Rather, it's to show you how to use the form in carrying out basic budget activities like confirming resources in your accounting system or checking the status of those resources. Are they apportioned? How much is obligated? How much is unobligated? How much has been paid? How much remains to be paid? But before we get to the form, let's do a quick overview of the life of an appropriation. We'll keep it simple and use an annual appropriation as our model in order to explain some of the concepts we'll need in order to understand the SF133. These four rectangles represent the period of availability of one fiscal year divided into 4 quarters. We start with a resource. Let's assume it's an appropriation. Some of the resources are obligated in quarter 1 and in quarter 2. Some of the obligations are paid in quarter 2. Obligations continue in quarter 3, and some more obligations are paid. During quarter 4, the remainder of the resources are obligated, except for a small amount, and a bit more obligations are paid. When we reach the end of the 4th quarter, our period of availability for obligation ends, and the funds expire or lapse. After expiration, the funds remain available for 5 additional years in an expired status in order to pay off the obligations and make any necessary adjustments to them. Once this 5-year period is over, the funds are canceled and returned to Treasury. Cancellation is the final budget execution event. Once this occurs, the TAFS no longer has any balance and is closed. Let's talk a bit about status of resources. There is a basic equation of the budget process. Resources on the left side of the equation must equal the status of resources on the right side of the equation. Here we can see that the status in each quarter equals the original resource. If this equality is always maintained, you can never spend more than your total resources. This basic equation continues throughout the life of the account. But what happens after year 1, after we've paid some of the obligations and the resources go down? Let's take a look at the status of resources at the end of year 1. Note that as the year ends, we have obligated almost all of our resources, and more than a third of those obligations have been paid. This leaves a balance of unpaid obligations and a small balance unobligated. This unobligated balance represents that portion of the original resources that did not get obligated before the period of availability expired. As we reach the end of year 1 and close it out, the paid obligations and the resources that paid them go away, leaving only the highlighted portion to track in year 2. It's important to remember that our accounting equation stays the same in year 2. Resources equals status of resources. The paid obligations of year 1 are deducted from both sides of the equation, the resources and the status of resources, thereby maintaining the equation in year 2. At the beginning of year 2, note that the sum of the obligated unpaid balance and the unobligated balance, referred to collectively as the unexpended balance, will always equal the resources in the account. You may hear these resources referred to as fund balance with Treasury. During year 2, we would see more of our obligations getting paid, leaving a smaller unpaid balance, as well as our unobligated balance. When we close out year 2, we can see the amount remaining to account for in year 3. The first thing we notice about year 3 is that the unobligated or white portion grew. That means that some unpaid obligations that had previously been recorded were de-obligated. For example, perhaps a company could not fill an order for a laptop because they'd gone out of business. So we reclassify the obligated unpaid status as unobligated. Note that their total resources don't change. Merely the status of the resources has changed. That is, the white got bigger because the green portion got smaller. Since the account has expired, this unobligated balance cannot be used for any new obligations. It can be used, however, to adjust any obligations made in year 1 that were underestimated, for example. More on this later. We can see that some more obligations got paid in year 3, leaving us with a smaller balance to track moving forward into year 4. Note that in year 4, the white portion, the unobligated balance, got smaller. This indicates that some obligation from year 1 had to be adjusted upwards, perhaps because it was based on an estimate and the final bill came in a bit higher than estimated. Again, upward adjustments change the status from unobligated to obligated unpaid and do not affect total resources. Well, by now you can see the pattern. This continues until the end of year 6. When we reach the end of year 6, we've reached the end of the life of our account, and we need to close it out. We note that there is a little bit left unobligated and a little bit that is obligated but unpaid. In closing out year 6, the first thing that happens is all unpaid obligations are de-obligated, and then all unobligated balances are canceled. This action returns the funds to Treasury through our final budget execution event, cancellation. When the funds in a TAFs are canceled, the resources are reduced to 0. So at the end of the life of the account, our equation is maintained. Of course, I've only shown you a simple example of an annual account. What about multi and no-year accounts? Well, the relationships are the same. In the case of a multi-year account, there would be additional years of availability, broken into 4 quarters each until expiration. Then the annual model would apply for the expired period of 5 years. With no-year accounts, there would never be an expiration or cancellation. but you would still have unobligated balances and paid and unpaid obligations, and the resources equals status of resources equation would still be in effect. These relationships represented between resources, obligations paid and unpaid, and expiration and cancellation where applicable are all documented in the SF133. So let's take a look. This is a condensed version of the SF133 to show the basic structure of the form. We'll get into more detail later. It's made up of 4 sections. A section on budgetary resources, which tells you what resources an account has available to spend, the left side of the equation. A section on the status of the budgetary resources, which tells you whether the funds are obligated or unobligated. A section on the change in your obligated balances, which tells you whether obligations are paid or unpaid. These 2 sections make up the right side of the equation. And a summary of your budget authority and outlays net, which gives us a related but slightly different picture of the account. So you can see that these first 3 sections of the SF133 help identify the amounts represented by the diagrams we just looked at and will help answer the questions we posed. Before we get into more detail on each section, let's take a look at this chart from Appendix F of OMB Circular A11. This chart provides an overview of the line numbers in Appendix F for the SF132, or apportionment, the SF133, Schedule P, or Program and Financing Schedule, and the Statement of Budgetary Resources, or SBR. Note the 4 sections that make up the SF133. Line numbers that begin with 1,000, 2,000, 3,000, and 4,000. Let's take a look at each section. Line numbers in the 1,000 series identify budgetary resources. That is, how much do I have to spend? What's it made up of? Well, primarily unobligated balances and recoveries, budget authority made up of appropriations, borrowing authority, contract authority, and spending authority from offsetting collections, transfers in and out, and rescissions, including sequestered amounts. It will also tell us whether our budget authority is classified as discretionary or mandatory. Note that the budgetary resources on line numbers in the 1000 series appear in the SF132 apportionment, the SF133, Schedule P, President's Budget, and the Statement of Budgetary Resources. So once you've learned these lines, you'll know them for all of these reports. Let's take a look at some sample lines. We can't cover them all, but we'll attempt to identify the lines that you will probably come across most frequently. Let's start with unobligated balances in lines beginning with 10. Line 1000 reflects unobligated balances brought forward. Why do we care about this amount? Well, if our account is unexpired, like a multi-year or no-year account, these funds on line 1000 are available from new obligations, and we use the SF133 to determine the proper amount available to apportion. If the account has expired, the amount on line 1000 would identify the amount available for upward adjustments. What are upward adjustments? Well, these are adjustments that include the recording of obligations or expenditures that were made before the account expired but weren't recorded in the financial system, or adjustments made for the difference between the original and revised amounts of the obligation. Examples of situations that may warrant upward adjustments include final rent or utility costs in excess of the amount obligated on the basis of estimates, grant reinstatements following a determination that a grant has prematurely been closed, increases due to an allowable cost overrun of a contract award, authorized travel taken but not properly recorded, increases due to shipment costs that were not included in the original contract. The unobligated amounts available for these upward adjustments in expired accounts correspond to the white portion in the earlier diagram of the life of an appropriation. It should be noted that the SF133 does not have a line number distinction between discretionary and mandatory unobligated balances. A11 does require this distinction on the apportionment, and internal accounting attributes properly identify the distinction. But the SF133 itself does not distinguish between discretionary and mandatory unobligated balances. Lines 1010 and 1011 reflect non-expenditure transfers out or in. If the account you're researching is unexpired, any amounts transferred in would be available to be apportioned and obligated. Line 1012 is used to reflect transfers from an expired account to an unexpired account. In some cases, statutory authority permits the transfer of expired funds into an unexpired account. This may be the result of the later determination of the extended availability of funds, like the Prevention and Public Health Fund, for example, or authority to reallocate unused expired funds to an unexpired account, like the authority in the Low Income Home Energy Assistance Program and Child Care Entitlement Program. Line 1021 reflects recoveries of prior year obligations. These are resources recovered due to obligations made in a previous year that, for whatever reason, are reduced or deobligated. In a multi-year or no-year account, these funds would be available for new obligations. In expired accounts, amounts on line 1021 may be used for upward adjustments. Line 1040 is used to reflect anticipated amounts that might ultimately appear on lines 1010 or 1011. Line 1041 is used to reflect anticipated amounts that might ultimately appear on line 1021. Here's an example of an unexpired no-year account, SF133. Line 1000 on the SF133 identifies over $39 million as carryover that could be apportioned and obligated in the current year. Line 1011 identifies a transfer of $1.2 million, a transfer from an expired account of $24,000 on line 1012, and a recovery of prior year obligations on line 1021 of $1.2 million. Note also the use of line 1040 to anticipate the $24,000. Once the actual transfer occurred in the third quarter, the anticipated amount became zero. The SF133 does not allow anticipated amounts at year end. Based on this review of the SF133, we can see that almost $42 million can be apportioned and obligated. In this sample of an expired account, we can see that $767,000 was brought forward on line 1000, and $475,000 was recovered on line 1021 during the year. While these funds cannot be apportioned and used for new obligations, they are available for upward adjustments. Now we see the Budget Authority series, beginning with the very popular Discretionary Appropriations on line 1100. Since the accounting system produces the SF133s, the report can be used to confirm amounts reflected as appropriated on an apportionment. Lines 1120 and 1121 reflect non-expenditure transfers of appropriations out or in. Line 1130 is used to reflect amounts of appropriations permanently reduced, either by rescission or sequestration, and line 1131 is used to reflect amounts of unobligated balances permanently reduced. Line 1134 is used primarily during continuing resolutions to reflect amounts appropriated that are not available for obligation. Line 1151 is used to reflect anticipated transfers that might ultimately appear on line 1120 or 1121. Here is a sample SF133 reflecting some of these lines. Note the change in the appropriation amount from Q1 to Q2. Q1 reflects the amount appropriated under a continuing resolution, and Q2 reflects the full year appropriation. Note on line 1134 the amount reflected as precluded from obligation. The $91.8 million on line 1160 represents the percentage of the annualized appropriation, $313 million, available under the CR. Line 1120 reflects a transfer out of $810,000, and line 1121 reflects a transfer in of $2.1 million. Note the anticipated transfer on line 1151 and the change in status between Q3 and Q4. Next, we see the mandatory appropriations section beginning with line 1200. These lines are pretty much parallel to the discretionary lines with a few exceptions. You may see line 1201 on trust fund and special fund accounts. This is the CDC CRADA account, for example. Line 1250 is used for accounts like this to reflect anticipated appropriations. Line 1270 is used for those few HHS accounts that receive advance appropriations: Medicaid, child support enforcement, and foster care. This advance appropriation was made available in the 2013 Appropriation Act for fiscal year 2014. This is done to ensure funds can be made available to states on October 1. Note also that the foster care SF133 reflects a sequestered amount of $125,000 on line 1230. Appropriations permanently reduced. HHS SF133s do not have discretionary borrowing authority on line 1300 or discretionary or mandatory contract authority on lines 1500 and 1600. Mandatory borrowing authority in the 1400 lines appears only in CMS in the co-op financing accounts. Here's a sample. But let's look at the 1700 and 1800 lines. Discretionary and mandatory spending authority from offsetting collections. These lines reflect resources that an account is authorized to collect and spend. Lines 1700 and 1800 reflect actual collections, either discretionary or mandatory. Lines 1701 and 1801, change in uncollected payments from federal sources, reflect amounts earned but not yet collected, otherwise referred to as receivable. And lines 1740 and 1840 reflect amounts anticipated to be collected. Here is a sample of the Aging and Disability Services Program's FY 2014 SF133. Note that line 1740 anticipates $52.1 million in discretionary reimbursements. By year end, the anticipated amount is zero. The receivable is $53.3 million, and $1.1 million has been collected. Some mandatory reimbursements are reflected as receivable on line 1801 rather than as anticipated on line 1840. That's because these are trust fund transfers mandated by law and as such are considered receivable by definition. In summary, all these lines in the 1000 series total on line 19XX. To reflect the total budgetary resources available in the account, the left side of the equation, resources equals status of resources. Now, let's take a look at the 2000 series lines, status of budgetary resources. This section tells us the status of our budgetary resources we just listed in the 1000 series lines. For example, how much has been obligated? Is it Category A or Category B? Is it direct or reimbursable? How much is still unobligated? Is it available now or is it available in a subsequent period? How much is not subject to apportionment? How much is not apportioned? Let's take a look. First, we'll focus on obligations that have been incurred. Line 2001 reflects direct Category A obligations, that is, by quarter. Line 2002 reflects direct Category B obligations, listed by project or activity. Line 2003 reflects direct obligations that are exempt from apportionment. You probably won't see this line used very much, since few HHS accounts are exempt from apportionment. Line 2101 reflects reimbursable Category A obligations. Line 2102 reflects reimbursable Category B obligations listed by project or activity. Line 2103 reflects reimbursable obligations that are exempt from apportionment. Again, you probably won't see this line used very much. In a recent update, the SF133 added line 2170, which summarizes new obligations in unexpired accounts, and line 2180, which summarizes upward adjustments in expired accounts. Upward adjustments are increases in obligations in expired accounts from expired resources. These occur, for example, when an estimated obligation is billed for a higher amount than had been recorded. Notice that the SF133 provides a bit more detail than the apportionment. On the SF132, or apportionment, apportioned amounts are not typically distinguished between direct and reimbursable. Now, let's focus on the unobligated balance. The SF133 not only reports on what has been obligated, but also reports on what has not. This is the only way we can be sure that all the resources have been accounted for. Remember our equation. The status of resources has to equal the resources. Line 2201 reflects the amount that's apportioned, but unobligated, and available for obligation in the current period. For example, if you were in the first quarter, the amount on this line would equal the amount apportioned for the first quarter minus the first quarter obligations. Line 2202 reflects the amount that's apportioned but unobligated and available in a subsequent quarter. If you're in the first quarter, all amounts apportioned for quarters 2 through 4 would be reflected here. Amounts apportioned as Category C would also appear on this line. In order to make the equation work, amounts apportioned in a future fiscal year have to be treated as apportioned in a subsequent quarter. Line 2203 reflects apportioned amounts that are anticipated but have not yet been obligated. For example, offsetting collections that you expect in the future. Lines 2301, 2302, and 2303 reflect those same entries for accounts exempt from apportionment. As I mentioned earlier, you probably won't see these lines used very often. It is important to recognize them, however, because in a few cases where amounts are reported on these lines, such reporting provides evidence of an account's exemption from apportionment. Now, let's take a look at unapportioned amounts. Line 2401, deferred, and 2402, withheld pending rescission, are no longer used by OMB. These refer to the requirement in the Impoundment Control Act of 1974 to notify Congress concerning amounts withheld from obligation, either because there's a reason to delay or defer it, or the amount has been proposed for rescission and the 45 days required for Congress to act have not passed. Line 2403 reflects amounts that have not yet been apportioned. If the SF133 is for an expired account, then the entire unobligated balance would appear here because the funds are not available for new obligations, and there are no apportionments of expired balances. If the SF133 is for an unexpired account, an amount on this line might be caused by collections or recoveries made in excess of amounts estimated and apportioned. New lines 2412 and 2413 have also been recently added to the SF133. Line 2412 summarizes all unexpired, unobligated balances, and line 2413 summarizes all expired, unobligated balances. Let's take a look at a sample. This is the status of Budgetary Resources section of the Aging and Disability Services Programs, SF133, from 2014. Note line 2001, which reflects the Category A direct obligations. Line 2002 reflects several separate Category B lines. Line 2101 reflects Category A reimbursable obligations, and 2102 represents Category B reimbursable obligations for several activities. In the unobligated balance lines, we see line 2201, which reflects unobligated amounts by quarter. The fourth quarter amount represents the expired balance or lapsed amount. Line 2403 reflects resources that had been unapportioned until the fourth quarter. This suggests that ACL collected more funds than apportioned through the third quarter and then received a reapportionment in the fourth quarter. It's important to note that the total status of budgetary resources on line 2500, which is the total of these two sections, obligations incurred and unobligated balance, must equal the total budgetary resources summarized on line 1910. This is a very important relationship to understand, so let's take a moment and review it. Returning to our earlier diagram, we can see that the budgetary resources must equal the status of the budgetary resources at all times. Note that in each quarter, the status represented as light green for obligated and white for unobligated, has to equal the resources. Now let's move on to the 3000 series lines, change in obligated balance. This section is going to tell us the extent to which obligations have been paid or outlaid. First, we'll see how much we have in unpaid obligations at the beginning of the year, if applicable. What do I mean, if applicable? Well, if you're reporting on a new appropriation in year 1, there cannot be any unpaid obligations at the beginning of the year. After year 1, however, you will most likely see unpaid obligations at the beginning of the subsequent year. Then we'll see how much has been obligated this year. This is just a summary of the information we just saw in the 2000 series lines. Next, we'll find out how much has been paid or outlaid this year and how much has been collected. Finally, the report calculates your remaining unpaid obligations. Let's look at the lines in more detail. Line 3000 identifies the gross unpaid obligations at the beginning of the year. Gross means it includes unpaid obligations from all budgetary resources, even offsetting collections. Line 3010 captures new obligations for unexpired accounts, and line 3011 reflects upward adjustments, that is, obligations of expired balances. Line 3020 reflects total outlays, both from direct resources as well as offsetting collections. The term for this is gross outlays. Lines 3040 and 3041 reflect any recoveries of prior year obligations from unexpired or expired accounts. If obligations are recovered, that is, de-obligated, then that would affect the amount of unpaid obligations left. Uncollected receivables, that is, amounts owed to the account at the beginning of the year, appear on line 3060, and changes to these amounts during the year show up on lines 3070 and 3071. Finally, the obligated balance beginning and end of year net is calculated and shown on line 3100 and 3200 respectively. In this ACL example from year 1 of the FY 2014 account, we note that there is no line 3000, no unpaid obligations at the start of the year. This makes sense. The SF133 tells us that during fiscal year 2014, $1.7 billion was obligated, of which $955.2 million was outlaid. This leaves unpaid obligations of $746.1 million. But $59.6 million in receivables still hadn't been collected. Taking this resource into account leaves an unpaid balance of $686.5 million. Let's take a look at the status of budgetary resources in year 2. Here we see the $746.1 million in unpaid obligations brought forward on line 3000. The net beginning balance of $686.5 million is shown on line 3100. We see a fair amount of outlay and recovery activity in year 2, and it all nets to an end-of-year unpaid balance of $184 million. Let's return to our equation. We established that budgetary resources have to equal the status of budgetary resources. It's important to note that the change in obligated balance we've been discussing is also a change in the status of the budgetary resources, from being unpaid to being paid. So we can see in this diagram where the light green, that is, unpaid obligations, turn to dark green, paid obligations. The amount of budgetary resources is not changed, just the status, so the equation remains equal. Now let's take a look at the last section of the SF133, the Budget Authority and Outlays Net section. As an analytic tool, I don't find this section particularly helpful. It does not add any new information that we have not already seen on the SF133. Its goal is to summarize the budget authority and outlays for the TAFs, both discretionary and mandatory. First, it summarizes the total budget authority gross by adding all forms of budget authority, including offsetting collections. Then it totals the gross outlays from new authority and balances, including outlays from obligations made from spending authority from offsetting collections. Next, it summarizes all offsetting collections. Finally, this section summarizes the net budget authority and outlays, both discretionary and mandatory and total. Let's take a look. For this display, I've arrayed the discretionary and mandatory lines together. The first section summarizes all discretionary budget authority on line 4000 and mandatory budget authority on line 4090. Remember, this includes spending authority from offsetting collections. Then, gross discretionary outlays from new authority are reflected on line 4010, mandatory on 4100. Gross discretionary outlays from balances are reflected on line 4011, mandatory on 4101. These are totaled on lines 4020 and 4110. The next section reflects offsets against gross budget authority and outlays. These are amounts we want to subtract from gross amounts in order to arrive at the appropriate net amount. If this is not done, the same amounts would be reported in two different accounts in the President's budget, thereby creating a double count. In the additional offsets against gross budget authority only section, we see the effects of several things that affect our budget authority but not our outlays. For example, a change in receivables or uncollected payments on lines 4050, 4140, 4051, and 4141 adjusts the budget authority by subtracting receivable amounts included as budget authority. Offsetting collections credited to expired accounts on line 4052 and 4142 also affect budget authority, but not outlays. Recoveries on lines 4053, 4143, 4054, and 4144 affect budget authority, but not outlays. Lines 4055 and 4145 reflect any anticipated offsetting collections, also affecting only budget authority. Finally, all these adjustments are reflected in the calculation of net amounts for budget authority and outlays, segregated by discretionary and mandatory, as well as totaled on lines 4180 and 4190. Those of you that work on Max A11 data entry should recognize these lines from the program and financing schedule. If we go back to our pictorial representation, we now see a comparison between budget authority and paid obligations or outlays. These, of course, are not equal. Note in some cases, BA includes spending authority from offsetting collections. represented by the orange slice. Outlays from this spending authority, from offsetting collections, are also represented. By subtracting these amounts from BA and outlays, we arrive at the net amount. Okay, now that we've reviewed what the SF133 looks like, let's talk a bit more about how we use it. First, let's consider how it's used for unexpired accounts. There are a lot of ways it can be used. I'll talk about just a few of them. I'm sure you can think of a lot more. To make sure accounting entries match the apportionment. To track obligations against apportioned amounts. To identify obligated amounts for apportionment preparation or operating plans. To identify carryover, if applicable. In conjunction with the max Treasury warrant report, to verify a Treasury warrant to the apportioned amount. And in conjunction with the max non-expenditure transfer report, to verify non-expenditure transfer amounts. Let's take a look. But first, where do we find the SF133s? Well, if we go to the internet, I have my own homepage as the HHS Budget and Performance News. If you go to that website under Execution, you will find Budget Execution Reports. And that will take you to the website at OMB. You will need a max ID to use this website, but I'm assuming that if you're watching this video, I assume you already have that ID. Okay, so now we're on the Budget Execution Reports page. There are a lot of really good reports on here. We'll be looking at a couple others in a moment: appropriation warrants and non-expenditure transfers. But for the moment, let's go to the SF133 Report on Budget Execution and Budgetary Resources link and click. This takes us to the SF133 report page. And notice there by fiscal year, all the way up from 1998 through 2017. Let's pick a fiscal year 2015 example. And then, of course, we'll scroll down to the appropriate agency, in our case, the Department of Health and Human Services, and we'll click on the quarterly report icon. Now that we're in the 2015 set of SF133s for the Department of Health and Human Services. So an easy way to do the search would be to do Control F and bring up a find screen. In that particular box, we will type in the following: a slash, the fiscal year, a dash, and the last 4 digits of the Treasury Appropriation Fund symbol, which in this case is 0135. And that brings up the relevant SF133 for the Office of Civil Rights. Now what you want to do is close this part of the screen and make the form fit your screen. And there we have it. Okay, here's a better look at the Office for Civil Rights SF133 for fiscal year 2015. This is the relevant SF132. This happens to be a sample from FY 2015. Let's compare the SF132 to the SF133. The first thing we need to do is check to see if the appropriation on the apportionment matches the SF133. We can see that it does. We can also see that third quarter anticipated collections match our previous apportionment. But something happened in the fourth quarter. An apportionment was submitted and approved with additional reimbursable resources, doubling the estimate from $250,000 to $500,000. But we also see that the final amounts for collections, both collected and receivable, total only $425,000, $75,000 less than the amount anticipated on the apportionment. Here, the actual information on the SF133 provides a better basis for future estimates. Let's compare actual obligations to the apportionment. The first thing I need to point out is that the SF133 reports obligations cumulatively, and the SF132 does not. So we need to keep a running total of apportioned amounts in order to compare with the SF133. This illustrates an important point about the apportionment. That is, amounts apportioned are also cumulative. Any unobligated amount carries forward from quarter to quarter until you reach the end of the year. We can see that the first quarter obligations, $8.1 million, does not exceed the first quarter apportioned amount of $10.8 million. The cumulative obligation of $17.1 million does not exceed the sum of the amount apportioned for the first and second quarters, $20.2 million. The cumulative obligation in the third quarter of almost $27 million does not exceed the amount apportioned for the first, second, and third quarters of $29.6 million. And, of course, we can see the total obligations of $38.6 million do not exceed the total apportioned of $39.3 million. It's quite handy that as of FY 2016, the SF133s are reported in dollars. That means we can now use the SF133 to provide memo of obligations data for apportionment preparation. Let's assume we need to prepare this OCR apportionment, and we need memo obligations data. We find the first quarter amount and enter it. Then, because obligations are cumulative on the SF133, we have to calculate the quarterly amounts for the second and third quarters. This calculation also provides useful information in developing future obligation plans. Here we use the SF133 to look up actual carryover. Note the amount on the SF132 matches the actual carryover from the SF133. I should point out that you should drop the pennies, even if they might round up to the next dollar. The apportionment does not accept amounts in cents. If you entered a rounded up amount in the apportionment, you might violate the Anti-Deficiency Act. So the safest thing to do is drop the cents when entering the budgetary resource into the accounting system. Let's confirm the Treasury warrant. First, we'll use the Reports on Appropriation Warrants on the Max Community page. Now, we can compare the warranted amount with both the SF132 and the SF133.
$38,798,000 on the warrant report, $38,798,000 on the apportionment, and $38,798,000 on the SF133.
Now let's verify a non-expenditure transfer. We'll go back again to the Max Community Reports and select the report on non-expenditure transfers. Here we can confirm a $932 million transfer and a $52 million transfer. This is just a sampling of the uses of the SF133 for unexpired accounts. But what about expired accounts? How might we use the SF133 for expired accounts? Let's talk for a moment about a couple of very helpful uses of the SF133 for expired accounts. I hinted at this earlier, but the first is to determine whether sufficient resources are available for upward adjustments. The second is the determination of outlay rates for max data entry. But before we get to these, let's take a moment and review the life of an appropriation. This diagram reflects the basic equation we covered previously, with the resource equaling the status of the resources by quarter. Note the period of availability, represented by the 4 quarters, and the obligation and outlay activity, represented by the light and dark green shading, respectively. At the end of this period of availability, the account expires. Then we have the expired period of 5 years, during which obligations may be adjusted up or down, and obligations are paid or outlaid. At the end of the expired period, any remaining funds are canceled. We're interested in the white portions representing unobligated balances, which are the available resources for upward adjustments. We're also interested in the dark green portions, specifically the relationship between the total green portion at the end of the period of availability and each of the dark green portions in each subsequent year. The outlays in each year, divided by the total obligations in year 1, tell us the outlay rate for each year. Let's trace our sample FY 2011 unobligated balance for a few years in the SF133s to see how much is available for upward adjustments. Recall that upward adjustments are increases to amounts obligated for a particular fiscal year that were originally based on estimates or had not been recorded timely. For example, upward adjustments for fiscal year 2011 can only be funded from FY 2011 unobligated balances. At the end of year 1, we see $23,000 unobligated on line 2201. This amount is carried forward to fiscal year 2012 on line 1000. During the year, $325,000 is recovered on line 1021 based on canceled obligations, providing a total of $348,000 for adjustments. $217,000 is obligated on line 2001 for upward adjustments during fiscal year 2012, leaving $130,000 to carry forward on line 2490. So we can see this $130,000 on line 1000 at the beginning of fiscal year 2013. Another $67,000 is recovered, and $24,000 is obligated for upward adjustments, leaving an unobligated balance of $173,000. We could continue, but I think you get the idea. Now, let's see how we can use the SF133s to calculate outlay rates. Let's start our research back in fiscal year 2006, back when the line numbering was a bit different, though still easily identifiable. We see that total FY 2006 obligations on lines 8A1 and 8A2 total $1,361.7 million, the sum of both Category A and Category B obligations. The total net outlays on line 19X equal $901.6 million. Dividing the $901.6 million by the 1361.7 results in a first-year outlay rate of 66.2%. Subsequent fiscal years give us the outlay information for each fiscal year. Dividing these amounts by the original obligation produces the outlay rates for each subsequent year. Note that by the time we get to fiscal year 2010, the line numbers have changed, and we now find outlays on line 4080. On this table, you can see this drill carried forward for fiscal year 2007, 2008, and so forth, all the way forward to FY 2013. We're particularly interested in seeing a full 6-year set of outlay rates. We enter these amounts into the spreadsheet, which does our outlay rate calculations for us, even providing averages. We now have a set of information that helps us decide the outlay rate to use in the max data entry exercise. These are just a few of the uses of the SF133. Before we leave this topic, let's review the different formats of the SF133. If you want to go back and look at old copies of the SF133, which are available all the way back to FY 1998, you need to be aware of the differences you might encounter. Feel free to pause the video at any time in order to take a closer look. From 1998 to 2003, note that each SF133 reported on only 1 quarter at a time, but combined all periods of availability in a single report. The line numbering was quite different and simpler. There was a section called Budgetary Resources, Status of Budgetary Resources, and Relation of Obligations to Outlays, but no summary of BA and Outlays net. Starting with fiscal year 2004, SF133s are prepared by TAFs, and all 4 quarters are included in a single report by year end, but there's been no change to the line numbers. By fiscal year 2010, the line numbers changed significantly in order to coordinate with the President's budget. Note the change in the line numbering. And the addition of the BA and Outlays net section. Finally, the most recent change occurred in fiscal year 2016, amounts to the penny. I've attempted to hit the high points in the SF133. If you're interested in doing more research on this topic, I recommend these links. I've already mentioned Section 130 of OMB Circular A11. Appendix F of A11 provides the definitive descriptions of each line on the SF132, SF133, Schedule P, and Statement of Budgetary Resources. Treasury's USSGL crosswalk for the SF133 and Schedule P in Treasury's TFM USSGL supplement is an invaluable tool in determining the standard general ledger accounts that make up each line of the report.
Thanks for listening. Give it a try. And so long for now.